What a beautiful day to be a bear. What's going on, team? It's Ricky with TechBud Solutions, and this is why the stock market is selling off today. I really hope that you guys learned something new in this YouTube video, and if you do, please consider dropping a thumbs up and subscribing to the YouTube channel if you feel like we earned it. Let me go ahead and start sharing my screen. Overall, NASDAQ market is down 1.76%. Again, a great time to be in SQQQ, and if you were part of our live trading session today with our LPP team, you would have seen that that was my primary focus today. We did a really great job averaging into this position and then exiting at overbought levels. I walked away today with $31,900 in the green, and I'm not holding the position anymore. I've closed it out, and I left myself with my one lucky share here on SQQQ. Just so you could see, I did not open a position on TQQQ. All I have here is my one lucky share that I've had since Friday. Other than that, again, why and what is going on with the NASDAQ market? Again, looking at this on even on the 5-minute time frame, it did break below the range that we were trading at within the past 3 days. We had a common support range here of around 357, common resistance range of around 362. We broke below that range, and that's really when we began to step on the gas. It formed lower lows and lower highs, just a lot of selling pressure. And there's two things that I think contribute to what's going on today. One of the first things that, again, everyone is talking about as of right now is that the 10-year Treasury yields have now offered 4.756%. Now, again, not enough people explain why this causes the markets to sell off. Anytime that market conditions are uncertain, and anytime that Treasury yields go up to a level that's something like this, a 4.756 return, right? This has not been offered since October 17th, 2007. So why does this cause the market to sell off, right? Well, again, investors are looking in areas of where to put their money. And if they see that Treasury yields offered nearly a guaranteed almost 5% return, and if market conditions continue to be uncertain, and the idea of the Federal Reserve potentially raising interest rates again, and all of this uncertainty and fear being injected into the market, 5% guaranteed a year sounds better than uncertain markets for what's to come, right? So do you either want to be invested in the stock market long term and take the risk of not getting at least 5%, or at least getting nearly 5% with these Treasury yields? Again, it pretty much is taking away money that would be invested in the market and now being invested in Treasury yields because they've become so attractive as a safer form of investment, right? Other than that, when it comes down to the economic reports that was released today, it was JOLTS, which are job openings. Job openings coming in a little bit higher than what was reported last time. So what and why is that a bad thing? This is something that I explained today to my LPP team, and it's super, super simple. Again, if job reports, job openings come in that there's more job openings than what was expected, that means that the economy isn't doing that bad, right? There's a lot of jobs out there, which supports a strong labor market. And it goes back to the idea of right now, good news is bad news and bad news is good news. Remember, the big fear right now is that the Federal Reserve is going to raise interest rate again. Shouldn't really be a surprise. Jerome Powell said it in his last speech, but it's because of this fear and because of what was just reported today that if data does not support that the economy is slowing down, that the labor market is slowing down, then maybe the Federal Reserve can justify more rate hikes in the future. And that's why the market's selling off. It's because the report was good that the economy is doing good. And again, the Federal Reserve wants to see the economy slowing down. And if they don't see that, then they can justify a larger rate hike, which again, or more rate hikes, which is again why we're seeing the market sell off the way that it is. So a lot of selling pressure today. I didn't want to overcomplicate it. So you might be asking the question, Ricky, then why would you lock in profits on SQQQ? One main reason. On average, two main reasons. On average, a 5% day for SQQQ or for TQQQ is a pretty significant day on average. So with that being said, knowing that it's already at that 5% mark within 2 hours of the market opening, to see much more progress beyond this based off of history of SQQQ is not very likely. It's possible, it's just not very likely. And remember, my goal, one of my rules that I plan to follow for October is any time that I'm seeing lack of progress, to never be afraid to lock in profits regardless of how much I'm up or down, to be efficient with the time that I spend in the market with a trade. Trading is so much more different than investing, right? It's much more risky to trade. And when I'm seeing lack of progress, when we showed strong progress, right, for the first hour, but then now we're beginning to kind of consolidate and lack progress for SQQQ, to me, it's like, okay, Well, there's lack of progress. It's already nearly at 5%. When we're looking at overbought and oversold levels, it's not like SQQQ is oversold. It's more on the overbought side. And then on top of that, it's like, okay, we're at that 5% mark. Maybe it's not a bad idea to call it a day here and then wait to see what happens tomorrow, right? It's knowing when to walk away. I know that a lot of people might not understand that because they're like, well, Rick, you just continue to trade. You're going to make more money. It doesn't work that way, right? Because if market direction changes, if this ends up actually being the peak and then we pull on back, there's so many different things that can go wrong. And remember, spending more time in the market does not mean that it's going to yield you a larger return. And that's the big misconception, right? So learn to be effective and learn to know when to walk away when, again, you've hit not only your kind of like target or goal for the day, but also when you're just seeing that trade opportunity is beginning to lack progress. And that's the easiest way that I can put it for you. So very grateful for how today played out. I'm excited to see if the market does end up, recovering, meaning that SQQQ pulls on back, then maybe I can entertain the idea of TQQQ. But other than that, I'm pretty much done trading for the day unless a crazy opportunity presents itself, and I tried to make the most of it. So again, treasury yields are at same levels as what they were in 2007. Again, treasury yields are viewed as a safer form of investment and pretty much a guaranteed investment at nearly 5%, which is pretty much taking away money from the market. And then again, the JOLTS, the job openings coming in a little bit higher than what was expected, supporting a strong labor market, which again, the Federal Reserve might not take that data lightly as they want to see the economic data and labor market data to come in a little bit weaker, right? They want the economy to slow down. They want the economy to feel the pressure, and what was reported today just doesn't support that. Good news is bad news, and bad news is good news, at least based off of how the market's digesting that economic report today. So I appreciate your time. Hope that we're in a thumbs up. I hope to see you for tomorrow's live trading session. Again, my LPP team got to see me trade live today. They got to see my entries. They got to see my exits. They get to hear my thought process behind every single trade. And if you don't want to miss it out, and you want to watch me trade live as soon as tomorrow, it's going to be the second link in the description down below. And also don't forget to enter our BMW M4 giveaway. And that's the fourth link in the description down below. Like always, let's make sure that we end the year on a green note. Take it easy, team.